future.
We have Hang Seng, which is absolutely flat, but with some positive bias.
Services sector, really, except for housing services, pardon me, is not really showing any disinflation.
It is going to be a deeply divided house. Not just because our poll, our own citizens, MPC, all of them were divided. There was no unanimity anyway.
They maintained their FY23 revenue as well as EBITDA guidance.
Nifty is up about 35 odd points, so marginally positive opening. The sensex is up about 90 points as well.
Phoenix is an old client of TCS, but now they've signed a fresh deal which is valued at £600 million.
Some shifting sands in the new age companies. For Zomato in particular, they report their third quarter results tomorrow.
Inflation still remains well above the target in major economies.
We are among the largest players on the Threads platform.
Now the Nifty is holding up with a triple-digit gain. The Nifty is up 120 points.
There are signs that really inflation is softening. It's clearly off peaks.
Yes.
Goods inflation may well, in many cases, be rolling over and declining.
In the last 3 to 4 years, the Reserve Bank has taken a number of steps to strengthen the resilience of Indian banks.
I think there was a fair amount of emphasis on saying that they want to see decisive moderation in inflation.
It is a gain of 160 points on the Nifty. We have the mid-cap index, which is also surging up around 250 points.
That was the day so far. You're with us here on Closing Bell, and what you see on your screen is, images from the IBLA jury event, which is being held here in Mumbai. You can see, of course, Adar Poonawalla there, and of course, you have Sanjeev Mehta of HUL, on screen right now. I mean, it's a power-packed jury, and we will, of course, have more of that later here on the program. So, the India Business Leadership Awards, the flagship awards that CNBC-TV18 hands out to visionaries behind outstanding businesses. The jury for that, of course, is meeting today. The jury includes Kumar Mangalam Birla, who is the chair of the jury. The members are luminaries like Uday Kotak, Sanjeev Mehta, Anish Shah, Zareen Daruwala, Dinesh Khara, Adar Poonawalla, and TV Narendran and Prabha Narasimhan. We also have V. Vaidyanathan and Rajiv Memani, who are part of the jury. So it's a power-packed lineup there, and we'll keep going back to that event which is being held here in Mumbai. All right, let's get to the market, which is, by the way, doing very, very well. Let's have the Nifty up on your screen. It's up 162 odd points at this stage, which means that we've basically taken out the 20-day moving average for the market. The 20-day came in at about 17,872, and we're about 10-14 points above it. Now, close is what will matter, and a good close will matter even more. So let's see if these gains are sustained and we can tick even higher. It kind of will open up room for further upsides if we're able to do that. Actually, last I checked, all sectors were in the green. But what's doing best is global-facing sectors. Metals is recovering after the last few sessions where it didn't do very well. IT and pharma are the other areas which are doing well. Market breadth is pretty solid, 1400 to 700, advanced decline 2:1. RBI was, I think, clearly more hawkish than what most expected, right? There were more and more, at least from the equity side, people saying that maybe this is going to be one and done, and maybe the RBI in some fashion will communicate that. They did not do that. They actually went the other way, saying that, inflation, core inflation is a problem, and perhaps there is more to do here. For now, equities aren't taking note. They're doing very well, and price action matters quite a bit. With me, of course, over the next 60 minutes are my colleagues Surabhi and Nigel, who joins in from the newsroom floor. Guys, hi, good afternoon.
Good afternoon, Prashant. Good afternoon, Nigel. Prashant, I guess for the market, this is perhaps a bit of relief because now the Fed's done. Powell's speech last night is done. Budget is over. So is the RBI. I completely take your point on board on core inflation and the exact wording of the MPC statement that I think sent the bond market into a bit of a tizzy. By the way, the benchmark yield is at around 7.34. So, minor strengthening has happened, which is why banks today are choosing to sit out of this rally. This wonderful green-looking screen that you're seeing, it doesn't really include too many of the banks. So let me just quickly bring you up to speed with some of the major movers and shakers. We're going to spend some time talking about the Adani Group because you had commentary from the regulator itself once again today different sort of statements being made about the strength of the Indian banking system. For what it's worth, the stocks today, most of the Adani stocks are actually tracking recovery. Adani Enterprises, Ports, Transmission, most of them are up. Adani Total Gas is down, Adani Green is down, but the others are seeing some recovery. That's point number one. Insurers are finally heaving a sigh of relief. There seems to be some bargain buying going on HDFC Life, SBI Life after the brutal budget blow. Then IT, as Prashant mentioned, so the gainers will come up for you. Most of your frontline IT stocks are doing quite well today. And then I just dial back to banks, and the picture as it stands is fairly mixed. So you've got Kotak and Axis, which is down, but then you've got SBI, which is not too bad. ICICI Bank is closer to the flat line. So banks are not giving a very clear picture. They're also trying to decipher things in the bond market and reading the hawkish part of the policy, as Prashant was referring to. But I want to sort of, before I hand it to Nigel, I want to talk about two mid-caps, the two new age stocks which are looking at excitement all over again today. You'll hear more on this. Look at Paytm Go. Price target that Macquarie has put out on this one is 800. What's making it so excited about Paytm? We'll talk about that as we go along. Zomato is reporting numbers tomorrow. And you remember that tweet that Prashant pointed out in closing bell yesterday, Deepinder Goyal's tweet saying they also want to quickly, rush towards profitability. We don't know if that happens tomorrow itself in the numbers, but the market is definitely very excited around some of these new age names. So Nigel, not bad. Plenty of green after a long time. We've got a solid 1% move.
Yeah, and I think just look at the bottom of your screen, because there was some pledge that was pending on Adani Ports as per the BSE release. It was at around 7.79% odd. Now, as per the release that just come in a couple of minutes ago, they're saying that they've released even that. And that explains why the stock that was already up close to around 6.5–7%, it's now moved to the gain of close to around 8%. Incremental good news coming in for the group will be a bit of a positive for the entire markets, because you want to see them stir off this trouble for the equity markets as well to move ahead, and that explains why Adani Ports, as we speak, is at the high point of the day. Moving to the markets, well, we're seeing a good amount of put writing today. 17,800 put, 17,700 put. There's massive open interest built up on both those two strikes, giving you a bit of a hope that maybe, in fact, that 17,600, 17,650, that'll hold out for this expiry. That is, that plays out tomorrow itself. The 20 DMA, as Prashant said, that's conquered out. The 100 DMA now is inside, 17,940 approximately. So the bulls will have an eye on that, but you'll want to see a good close. We're currently holding with a gain of around 155 to around 160 points odd. You'll want to close in this vicinity, not want to see a big downtake in the last 60 minutes or so. That gives you a chance tomorrow to make a bit of a dash towards the 100 DMA. So let's see what that's happening. And today's move is particularly heartening because the Nifty Bank has not yet participated. If it's having an off day and it's going to come back in style tomorrow, that's what will help us make a bit of a dash towards that 18,000 odd mark. Silvi?
Oh, absolutely, that's a fair point. If the banks were to join this party, then things could look even better. Let's tell you what's lined up over the next 60 odd minutes. It's a packed show as always. First up, we will put focus on two of these new age stocks that we just referred to, Paytm and Zomato. Both are buzzing around, so what's causing the stir, we'll tell you more about it. Shree Cement is reacting to its Q3 numbers. We'll talk about that as well. And Adani Ports, of course, continues to dominate the headlines. It is one of the top Nifty gainers today. Of course, buzzing on the back of the upbeat management commentary, as well as the share pledge releases that are coming through. We'll talk about all of this. Of course, we'll also be joined by our market expert, Prakash Diwan, as well as Neeraj Diwan of Quantum Securities. They'll give us a fundamental view on the stocks and the market. We'll also have Rupen Rajguru, Head of Equity Investments and Strategy at Julius Baer, for some more market perspective.
Okay, well, how should you position yourself in the last hour of trade? Mitesh is with us, as always, to run us through that. Mitesh, that close above 20-day will, I think, provide some support. But what are you watching? What are your views, and what would you advise in terms of specific trades?
So, Prashant, I think very clearly, one, the 20-day average has been taken out. Two, I think that pivot of 17,850 has been taken out as well. So I think this pullback should continue on the upside, possibly to about 17,900, 17,980 zones, 18,000 levels. And if you clear that, then even 18,150. So trade with positive bias. In case somebody wants to buy now, I think 17,840 or 835 thereabout should be the stop loss. And on the stock side also, we will advocate long position. So very clearly, it's a market which looks like sliding or moving on the upside in the next couple of sessions until we start breaking below 17,830 again. So having said that, Reliance is something which is reversing from oversold levels. That's a buy. Keep a stop loss just below levels of around 23.25 here, and a target of 24.10, 24.20 can be looked at to begin with. The other one is a mid-cap stock. Ramco Cement is having a good price volume breakout. That's a buy with a stop at about 712 and a target of 755 on the upside.
Right. Thanks a lot for that, Mitesh. Well, Ramco moving quite well yesterday as well. The numbers were quite encouraging, both on the volume side as well as on the margin side as well. It looked quite good. That's what we told you in closing bell yesterday. Moving on to another stock from the new age theme, Zomato. That's surging in trade after the founder put out a tweet yesterday, and the street has read that rather positively. The stock is up close to around 15% from yesterday's low itself. Mangalam joins us to fill us in with those set of numbers. Mangalam?
Well, indeed, a lot's happening on Twitter. But apart from all of that, there are some shifting sands in the new age companies. For Zomato in particular, they report their third quarter results tomorrow. ICICI Securities expects an overall revenue growth of 6% quarter on quarter and 59% year on year. But this morning, we also had a CLSA note. They have a buy rating with a target price of 70 rupees on the stock, with the company expected to continue its march towards profitability. They expect 5% contribution margin and 2% adjusted EBITDA margin, which implies that they would turn EBITDA profitable. Remember, the previous couple of quarters, they were EBITDA profitable in their core food delivery business itself. And they've said that commentary around addition of cities and contribution of top cities will be extremely crucial. And due to increased focus on profitability, they've lifted their FY23 to FY25 earnings by around 4 to 8%. And that then finally brings to the point on, is it a good time for all the new age companies right now? Primarily because on the one hand, we see all of them talk about increased operational performance. Secondly, there has been a massive correction in valuations. Thirdly, there is tighter funding for competitors because, funds have dried up. At the same time, these companies, because of the virtue of the funds that they raised in the IPO, they have a long runway for growth for themselves. And global interest rates, they are near peak. Everyone was talking about valuations for them falling as global interest rates were rising. But now if the belief is that global interest rates have peaked out, are we looking at some sand shifting for all these new age companies is something that we'll be monitoring.
All right. Thanks very much, Mangalam, for giving us that perspective. The sands are shifting, well, perhaps to some extent at least. Let's get in a view from Prakash Diwan. He's joining us on this leg of the show. Prakash, good afternoon. Thanks for being with us. From a high of 150 odd to 50, some of the brokers are now saying 70, as Mangalam just pointed out. Are the sands indeed shifting for Zomato?
Good afternoon, Survi. So you just need to wait for a day. And I love the way Mangalam describes these, situations so well. Interestingly, what's happening is that this entire new age businesses that went public last year, the learning curve seems to have been fairly quick and steep for them. They've seen the kind of damage, that's been inflicted upon their stock price, their reputation, their ability to continue raising money. And that's exactly also working in their favor because the environment is so difficult to raise funds for competition that anybody who's already sitting on cash and is in a stage where they can actually start getting into profitable unit economics earlier than the competition, you'll probably have a much significant market share and pricing power come back. And that's exactly happening to Zomato. Zomato has done a lot of changes in its offerings. If you would have noticed that even as a consumer, not just as a shareholder, in terms of, taking things out of the menu, what's not working for them. So I would be surprised if tomorrow's earnings call actually talks about the levers that they are working towards making this profitable if it's not already profitable. So I think that's a great respite for shareholder wealth creation. But do you buy this after 14-15% of an upside? I would not jump at it at this point in time. Even if I had to buy it at that higher, I'm sure the numbers will give you enough opportunity to see visibility in the next 4 quarters, and then you will get an opportunity to enter at some point in time where the risk reward is favorable. But yes, I think the worst seems to have got over from a profitability perspective in terms of anticipation at least. But we'll wait for the validation. And as I said, it will restore confidence in a lot of the other names, not just these 2 big names, which have been disappointing, but it will make a lot of people come back. New IPOs probably start getting announced after a while. All of that action will always be positive for the markets.
All right. Prakash, stay with us. We want you to respond to one more name from the new age space, Paytm. But, let's bring in Abhishek. It's up, it's surging 14, 15. I'm not sure since its listing, I think in late 2021 it was. it's ever had, November 2021, it ever had a 14-15% kind of a day. At least I don't remember. Abhishek is here. Abhishek, there is a double upgrade from Macquarie, right?
Well, it has had a downward trend of 14-15% that we have seen earlier post the listing. However, to begin with, Macquarie has written a note on Paytm. They have double upgraded the stock to outperform from underperform. The target price is increased massively to 800 from the earlier target price of 450 per share. They say that the FY23 and 25 loss per share is estimated to be lowered by anywhere between 18% to 72%. So the biggest surprise is the distribution business, control of cashbacks and operating expenses. They say that the price matters in conjunction with the fundamentals which is there with the company. So Paytm has positively surprised on the distribution of financial services revenue by a wide margin. And they also see a very visible change in the approach of the management towards profitability. So they have raised their FY23 to 26 revenue estimate anywhere between 33% to 51%. Earlier today, we also had the business update for January coming from Paytm, which says that the number of loan disbursed is up 103% YOY and about 4.5% month on month. The value of loans disbursed, that's up 326% YOY and about 7.2% month on month. The gross merchandise value, that's up 44.5% YOY and about 1.7% month on month. Calculation shows that the average ticket size in this gross merchandise value is down about 2.9% month on month. So number of transactions have also increased by about 29% YOY and 4.7% month on month, while devices deployed that has increased by 165% YOY and about 5.2% month on month. So all this are seeing in trade today. Back to you.
Okay, got that. Thanks, Abhishek, very much, Prashant. I like how, the terminology in the market, double upgrade, it's like double dhamaka. In case you're wondering what is this double upgrade, it's basically they were underperformed. They've straight gone, they didn't go to market in line, they've straight gone to an outperform. So it's like 2 levels skipped and then gone up. 14% on the stock today. Prakash, your thoughts on this one?
So we very, I think this is, as compared to Zomato, the good news here is that you already seen the numbers. And then there is a very clear change in body language from the management, as Abhishek also rightly said, where they've got much more conscious of the fact that the street will only reward if there is improvement in revenue and profitability both. I mean, revenue alone by itself is not a metric that the market will keep rewarding you forever. And interestingly, a lot of the investments they made in, the non-payment businesses, apart from the core, those have started aligning very well in terms of adding some sort of a, traction. I know for sure that the kind of competition they're giving to Pine Labs on the POS, for example, it's a very strong vertical that they have realized they need to be good at, and then they naturally is a good fit for them. So those kind of things will happen. But hey, you know what? It's yet too early to sound the bugle out and say everything is kind of turned around completely. They're moving in the right direction. So the markets probably, or these brokerage reports, are rewarding the turn in direction and not necessarily the milestone that they have yet attained. There's much more to go. And it's a long journey. But it as I said, the selling will abate, and that's exactly why you're seeing the screen getting into this thing. What Prashant said is one of the historic days where they've been 14% up and not 14% down. So that's a little bit of a technical thing where the selling probably has got absorbed and people have started looking at it from a hold perspective. Whatever you want to call it, the nuances of outperformance and all. But what we'll need to now watch out for is whether they don't make any mistakes in terms of pumping too much of capital into businesses which are yet very, very small and which need a lot of long-term nurturing. So, they should focus on the core business, and that's where it's going to pay off. So, so important that we track it much more closely and with a little bit of a sliver of optimism than before. But don't jump at it. 670 is not something where you're going to get amply rewarded very soon.
Okay, so tread with caution is Prakash's advice. By the way, even Nykaa is up today. Just noticing Nykaa bounce around on the screen as well. 144 on this one. That's a 5.5% up move on Nykaa. So Paytm, Zomato, Nykaa, the whole lot. The basket's moving higher. We will take a break on that note. On the other side, we'll be back with Rupen Rajguru. He's head of equity investments and strategy at Julius Baer. Get some thoughts on the market.
Welcome back. Here tuned to CNBC-TV18, and we are coming to you live from the Motilal Oswal newsroom here in CNBC-TV18. Well, the markets are looking up, actually. We are holding with gains of around 165 points odd. But it's a good time to revise a couple of numbers that came just an hour or so ago. Shree Cements, well, those numbers look more or less in line. On the top line, there was a small miss. And that's despite the volumes coming a little bit better than expected. So the volumes beat our expectations by close to around 100,000 tons. That tells you that, in fact, realizations were a bit of a disappointment because it did see a bit of compression. You would have thought that they have some exposure to East India, so maybe realizations could get some support, but that clearly hasn't happened. The EBITDA number, though, is bang in line, and since the top line is a bit of a miss and the EBITDA, absolute EBITDA number is in line, that's what gives the margins to come in a little bit better. The volumes are high by close to around 23%, and operating leverage has played out. Freight costs per ton are lower, other expenditure per ton as well haven't gone up as much as the volumes, and also employee costs per ton haven't gone as much. The PAT number, though, has missed estimates. You'll be a little bit worried, but don't be so, because the operating profit is what you track very, very closely. The reason the PAT missed expectations is because finance cost is higher, depreciation is higher since they've been adding capacity, and also you have effective tax rate that was relatively high. The management says they're focusing on cost efficiencies, and also they're looking to scale towards 80 million tons odd. So all in all, a fairly inline set of numbers coming in from Shree Cement. Well, Prakash, what do you make of these set of numbers? And now we have got most of them with us. Your favorite, Dalmia Bharat, well, full marks to them. Good performance coming in there. Balance sheet is fairly clean as well. They're scaling up in terms of capacity, and they have some valuation comfort. So among these big boys, ACC, Ambuja, Ultratech, Shree, Dalmia and Ramco, who do you prefer?
So, Nigel, I think after these numbers from Shree, you need to put these in context. Two things, that the entire industry, particularly the high capacity owners of cement businesses, are finding it extremely difficult to pass on prices. And that's exactly why you can understand the backdrop of the GST clamor for the GST reduction, right? So if that goes through, it's going to be a very different pricing dynamics for all of them to enjoy. Secondly, Shree has probably been able to move up on the value chain in terms of its capacities and economies of scale by putting all the cash that they generate back into the business, right? They've not had any acquisitions in the last many years, but they continue to reinvest in the business to be able to match up with the big boys. And I think that's going to pay them off very well once, it stabilizes. And this blink by Ambuja in terms of, now they're probably their difficulty, or I would say inability, but the kind of challenges they have in terms of expanding and making more capex gives the advantage to Ultratech and Shree to be able to get some market share gains. So that's very clearly something which will work in the favor of Shree. But of course, as you said rightly, Dalmia Bharat continues to still offer great value, and the way they are scaling up, I think it's tremendous, including the inorganic route that they have adopted. So I continue to like that, but Shree, the numbers are far better, if you ask me, than what probably the market is right now responding to. And you'll probably see that build up over the next few months when the sales numbers start coming in. So definitely full marks to Shree's efficiency levels and the way they manage the costs, particularly amortizing the fixed costs over a larger capacity, and that will continue to show positive impact.
Okay. I think we lost a line there, but I think Prakash, all right. Prakash, thank you very much. Appreciate you joining in, and good speaking with you as always here on CNBC-TV18. Now, we have Rupen Rajguru joining us. He's the head of equity investment and strategy at Julius Baer. Rupen, good to have you with us here. Thank you very much. I believe, your view is that the markets here in India will underperform global markets. Broadly will be range bound. But I want to start with how you're viewing the third quarter earnings which are coming through, Rupen, because as I'm seeing it, there are far more number of downgrades to upgrades. We'll put that data out later once this week is out. But how are you and your team viewing the earnings so far?
Okay, hi. Good afternoon, Prashant. So you're right in saying that the third quarter earnings have been a mixed bag. I think the big shining star in the quarterly earnings are financials. And we have seen record profits from both public sector banks as well as private sector bank. Probably, the largest bank, touching the ROE touching 18%. I think it's a big number. while we have financials and automobiles which have done exceedingly well in this quarterly earnings, but clearly we have seen some of the consumer discretionary companies are facing a bit of headwinds. So the select QSRs, retail, have shown some signs of struggle in this quarter. So while on an aggregate basis, because of very strong numbers by financials, I don't see a significant cut in our the Nifty earnings estimate for this year. But we have to, coming back to your original question, on India and the relative underperformance. And this is the year, Prashant, what we are seeing is the year in which we are...
Sorry, Rupin, if I can just, sorry. On that question on financials, right? I went back and looked at, numbers are strong, absolutely. But are these numbers leading to upgrades for FY24? That is what matters, right? Upgrades or downgrades for how you would value the company. I mean, take a look at this. And these are companies, I think, which have reported. ICICI Bank, no upgrade. I looked at Axis Bank, no upgrade. HDFC Bank, 0.19% upgrade. IndusInd Bank, this is, by the way, as compared to the pre-quarter. So basically about a month ago. IndusInd Bank, no up. The only bank which is seen, at least in the Nifty, which has seen an upgrade is SBI, and that is about 3.5%. So, it's more like no downgrades, but no upgrades as well, even in financials. Go on, Rupen. Finish that point.
It's a fair observation, Prashant. But even if there were to be no upgrades, if you see also the growth which the analysts have built in for next year for FY24 for financial is pretty robust, right? So it's not that they are not expecting any growth. You're right in saying that there hasn't been any upgrades, but I would say at an aggregate level, this quarter earnings has not led us to change any estimates so far for FY23 or FY24 as far as the earnings is concerned. So ultimately, it all boils down to how does the India valuation stack up vis-a-vis the global market, right? Because you're right, if there were to be more upgrades, then we might see the market momentum. And hence, we are seeing the market is where it is, right? We have hardly seen a 1% negative movement so far in this calendar year for India. And that's precisely the reason for that.
Okay, got that point. Market for the time being is still holding up. Actually, it isn't moving much. Just about a 1% up move on the Nifty continuing. The mid-cap index is in step with the Nifty and the sensex, and Bank Nifty is slightly better off, but still just a 0.25% higher, not in sync with the rest of the screen. For the time being, let's focus on an Adani Group company that continues to be in the headlines, and we're talking about Adani Ports. It is, of course, one of the top index gainers today. Vivek is here with the highlights from the company's conference call yesterday. Vivek, I suppose their decision to go slow on capex, repay some debt, that's been very well received by the market today.
Well, absolutely right. What actually happened is that the key worry as far as market participants were concerned was the guidance, and the management, actually assuaged all investor concerns on that front. So what's actually happened is that the management maintained its FY23 revenue as well as EBITDA guidance. You remember the revenue guidance was in the range of 19,200 to 19,800 crore, and EBITDA guidance was in the range of 12,200 crore to 12,600 crore. So FY23, that is being maintained. Also, what the management has done is they've introduced the EBITDA guidance for FY24, seeing a strong growth. So they're expecting EBITDA in the range of 14,500 to 15,000 crores for FY24. Along with that, what they're actually expecting is that net debt to EBITDA is going to be reduced to 2.5 times by the end of FY24, which at the end of FY23 they expect to be around 3.5 times. So again, net debt to EBITDA coming down is also being seen quite positively. Brokerages naturally were enthused. CNBC upgraded the stock to a buy stance. What they said is the key takeaway from the third quarter call was the fact that number one, FY23 guidance has been retained, and now the company is resolutely focused on bringing down the net debt to EBITDA ratio to 2.5 times versus 3.5 times earlier. Back of that, you're seeing, the stock move up quite significantly in the session today.
Okay, all right, Vivek, thanks a lot for that. Well, Rupin, I'm reading some of your comments, and you were talking about, buying select stocks on dips, as well as some tactical trades on swing sectors could be beneficial. Well, if you got into this Adani Group close to around 7 days ago, you'll be dancing away to the bank. I'm not talking about before that. But, that swing trade did play out, particularly in stocks where, the core business was good, whether it was Adani Ports, ACC, or Ambuja Cement, so just name a few. What's your view on the group? If there's something you like out there? And also, do you think most of the bad news with regard to the group and its impact on the markets, that's behind us for now and things are under control?
Yeah, hi. Afternoon, Nigel. I know I would refrain from commenting on particular sector or a stock or a group. But here, and as you rightly said, that amongst the various assets which this company had, the port assets was the most valuable and also had good cash flows, and that's what market is taking into cognizance. But if I were to step back and see, I think there was big swings in the group stocks post the report, but it did sour the sentiment as far as India is concerned. But having said that, what we have seen it in the past, Nigel, that people do tend to have short memories. So probably 10 days down the line, it might be business as usual, and we might hopefully not be discussing this stock with this much intensity the way we are discussing, but where we have been discussing for last 10 days. But from a stock market perspective, usually we see definitely, in some of the group companies, the valuation was much inflated, and that valuation correction which some of the group companies saw probably was warranted. But as I said, we do just a caveat or a disclaimer here: we don't have any coverage on any of the group stocks, so no, we don't have a formal view on the any of these companies.
Rupen, from the stocks that we just spoke about, ACC and Ambuja, they are the cash flow generating companies. Free cash flows churning up of close to 4,000-5,000 crores every year. Plus, they're sitting on cash as well, so they offer some margin of safety. Since you're not commenting on any particular stocks, but what about the sector? I was on the con call, Ambuja Cement's con call earlier, and I wish that the lines were a little bit clearer because it kept logging off and on. But the broad message you got from them is they are looking at capacities, and they're looking at doubling capacities from year on, which the market is a little bit doubtful on. Given that incremental capacity may not come on, do you believe that the cement sector will look up from year on? You had a good budget, maybe the worst of input costs are behind us, and volumes will pick up. Your take?
No, you're absolutely right in your observation, Nigel. In this financial year, if I were to take a rough breakdown, the overall input cost for cement companies at an aggregate level went up by almost 22%, whereas the price hikes were only to the extent of 10-odd%. So what that led to, if I were to just take quarter two's total number, the EBITDA per ton crashed from 1,200, 1,300 rupees per ton to almost 600. Probably in this quarter, we are getting into that 800, and we might exit this year at closer to 2,000 per ton. We are clearly seeing the input costs kind of getting now into the base, and we are seeing that improving. Secondly, you are right that once the acquisition of the second largest group happened, Holcim Group happened, all other incumbent companies announced huge capex, and all want to reach, the largest company wants to reach 200 million ton, others want to reach the 100 million ton. In fact, Holcim Group also had a vision to have close to 150 million ton capacity. So all those, everybody accelerated their plans because they expected disruption. But now probably the disruption will not be as intense as what was feared. So that supply pressure is definitely there, but not as bad as what it was anticipated. Having said that, coming to the growth, if you look through the kind of big capex announcement which the budget has mentioned, all coupled put together, we expect a very strong volume growth for the industry. And from here on, from next 2-3 quarters, we expect every quarter the EBITDA per ton to move up from the current level. So yes, we are constructive on the sector per se, and the pace or the intensity of capex or expansion planned, if that tapers off, it should augur well for the sector.
Okay, Rupen, good talking to you today. Thank you very much for joining in with all of that perspective. Appreciate your thoughts. Well, the market is holding on, not too much changing. We've still got a gain of about 150 on the Nifty. Just looking at HDFC Life, interestingly, this stock, which is up about 5% today, around the budget, just when that big blow happened, it fell from a high of 580, 585, fell all the way down to about 480 thereabouts, a 100-rupee fall. it's recovering only a very small part of that. So let's see if this is a sign of some sort of a bottoming out or something more. But I think there was a significant amount of price damage, Prashant, that happened.
Yeah.
This is just day one of a little recovery that we're seeing.
I mean, this year's high is 620, 623 or so, Surabhi. And, the stock's not done anything for almost 4 or 5 years. It's exactly there. We reported, by the way, yesterday, with regard to the budget proposals, is that the industry has met the finance minister to kind of tell them that, they should make that threshold in terms of premium paid, not 5 lakhs, but 10 lakhs. We've not heard anything in terms of anything concrete moving on that front. The representation has been made, as happens, as we've seen in the past as well. Now, of course, it's up to the government if they want to take this up and what way, etc. But I don't think it's that. It's, I think, we got the monthly numbers for the industry, life insurance numbers, and of course, it's been beaten so much, so maybe just a bounce. The other stocks are also bouncing. SBI Life, it should come up. ICICI Pru should come up. Max Life, I'm not sure. Max Life and HDFC Life are the two which actually saw the biggest knocks. So that is SBI Life up about 3%. ICICI Pru is up about 2%. And then we'll have Max Life as well, which is up 5%, 5.25% or so. So there is a bit of a rebound in the life insurance space. We'll take a very quick break here. We'll come back and we get you, BTST trades, what to buy or sell today for reverse trades tomorrow. Mitesh, of course, will be with us to help us with that. Stay with us. Okay, with 17 minutes to go for close, welcome back. I mean, I think what you can say is that the market's so far not been able to build on the gains that came into, the last hour with. It's actually lost a little bit. From the day's high, which was about 17,890 or so, we've given up about 20 points. But that's 20 points, not, neither here nor there. But the point is, it's not built on that. I think that's the way to look at it. Mitesh is with us with the quick BTST trades and any updates on the screen he's watching. Mitesh, over to you.
I think you just mentioning HDFC Life. I think good reversal from oversold levels, and the other insurance stocks are also reversing well. So that can be taken as a BTST kind of a trade. HDFC Life is the first stock and Tata Motors is the other one. I'll start with HDFC Life. BTST here with a stop at 504 for targets of 518. And Tata Motors is a BTST with a stop at 435 for targets of 446.
Thanks a lot for that, Mitesh. By the way, we have Escorts numbers, I think, that were flashing for you on the screen. We should get that up in just a bit. So the initial numbers were flashing. I think in just a bit, we'll pull up those numbers as well. For the time being, a quick check on the markets. Adani Enterprises, by the way, has been locked in upper circuit with a gain of close to around 20%. So good going out there. And Max Financial as well is up close to around 6.5%. We're waiting for the Escorts Kubota's numbers. That should be flashing for you on the screen. In fact, they're up for you. The revenues have come in high by close to around 15% approximately. And the net profit number as well is something that we'll be looking forward to. That's come in lower by close to around 7%. So interesting to see whether or not that top line growth has not percolated down to the net profit number, because there could possibly be some compression on the margin. So let's see whether or not that has happened. We'll get those numbers in just a bit, and maybe Sonia will be joining in for a quick take on that front. But let's talk about one of those big movers, Max Financial. We have Neeraj Diwan, who's Director of Quantum Securities, who joins us. Hi, Neeraj. Good afternoon. Any view on this one? Max Financial, a couple of days ago, it was hovering around 700 odd. A lot of these insurance stocks that got hit, well, they are bounced back up. From the insurance pack, is there something you like?
Yeah, good afternoon. Actually, from the life insurance pack, there's nothing really which is looking very attractive, though stocks have corrected. They may have made if you look at LIC, which was already cheap, has again corrected after whatever the budget announcements made. HDFC Life has not done anything for the last 2.5 years, and it saw correction. So they're also for a long-term investor, not being able to make any money on these life insurance companies. But I think I'd still go, if I have to go with insurance, I'll go with the general insurance pack. So I say the Lombard will be top. I'll still keep my portfolio or recommend to buy. But life insurance, I'll still stay away from.
Okay, we just seem to have lost that line with Neeraj. We will try and get him back on. But yes, insurance as a space is doing quite okay actually for itself. Let's check out what's happening to the result reactions from post-market hours yesterday. Hero is down, and that's quite understandable because the performance was very lackluster, less than 2% top-line growth, margins below 12% yet again. So Hero, of course, the management did, Sonia was telling us in the conference call, they did say that their new launches should stir things up a little bit, but the market's not running away in excitement just yet. Bharti Airtel is the other one, which is reacting negatively, but the numbers were absolutely in line on Bharti. There was absolutely nothing amiss as far as the earnings are concerned. Neeraj is with us. Neeraj, go on. You were talking about your approach to insurance stocks. I think just having a little bit of a tough luck with the networks there. That's what's sort of standing out today. Some other names. Let's look at what else is moving around. Thermax, in terms of result reaction, I haven't spoken about too many mid-caps beyond the new age companies. Thermax's numbers went down very well with the street, 4.5% up on this stock. And then you have a GNFC, which did pretty okay for itself. Some of these names on the upside of the screen.
Many more, Surbhi. So look at something like a Fluorochem, right? I mean, it's back at almost 3,000 rupee levels. Should come up on your screen. The life insurers we mentioned, they're popping up all over the place. Look at Credit Access, a high quality microfinance player, 6% higher at about 956. That is Credit Access. Wonderla was up, big time yesterday. It's up another 9% today. Railtel is up 6%. These are all, liquid, large mid caps. Look at Sula. Sula is, 380, 5.5% recent listing there, which came through. Of course, I mean, for the new age pack, while we've been focused on Zomato and Paytm, look at Policy Bazaar, which has got a 7% pop, 482. And of course, Surbhi earlier mentioned Nykaa, which is up about 5% or so. So it's a pretty vibrant sort of picture when you look at the broader markets, mid caps, small caps, etc. In particular. Market breadth is still pretty positive. I mean, I'm seeing 1,400 stocks higher and about 800 stocks which are lower overall on the NSE.
So, Prashant, you mentioned Wonderla. Let me, put on board over here because we were speaking with the management earlier today in trading hour. Not often do you see businesses literally thumping the table talking about pricing as well as footfalls, categorically saying, I mean, price points for Wonderla Holidays, for their theme parks, are higher, much higher than where they were even pre-COVID. Forget the whole COVID disruption. Plus, they're building 2 more parks. One in Tamil Nadu is kind of on hold right now because of some tax issues. They're looking for some tax incentives, but the Odisha one is underway. And very, very robust numbers coming through for Wonderla Holidays, and the market is liking the sound of that. So that's one mid-cap that's definitely flying away today. Neeraj, since we're on the subject of a lot of mid-caps, new age companies doing well, stock like Wonderla, some of the other result reactions like Thermax. Tell us 1 or 2 names that you like, something that's caught your eye.
Actually, among the stock that we track, Surya Roshni was one which came out with very good numbers because besides the, their lighting and consumer business, their pipes business is doing very well, and that all the consumer industries which use their pipes should do well with the kind of order book that they have. So this is one stock from the result in the mid cap that I like. Another one, I think from the infrastructure space, there are companies like Kalpatru Power. Then there's railway companies like RITES, which I feel are the ones going ahead also with the kind of order book positions that they have. And even in the rice pack, though there was some pressure on the margin, but top line has been pretty good for companies like KRBL. So that also I feel should do well. Margin should improve going ahead for them.
Should see some improvement. What else are you? Have you picked up anything over the last week and a half? I mean, the entire Adani issue was it blew up in such a way that there was a fair bit of dislocation which happened. Very large, significant price moves. Did you pick up anything during that period, Neeraj?
Yeah, basically some banks definitely, because something like IndusInd Bank, which we've been tracking, IndusInd Bank also came to very attractive levels. So IndusInd Bank from the banking space is something which we added. And even the NBFC space among the housing finance companies, Home First is one which results were very good. It corrected after the results because of whatever was happening with the market in because of the Adani stock. Home First is another one we added there. And among the, like I mentioned, about the rice companies which we track, so KRBL and Dawat are the ones which we picked up. And then, even in the cement space, companies like Ultratech Cement, which also corrected with the market correction. And in the infrastructure space, NCC, L&T, so these are the companies which we've added and which we feel, next 6 months to 1 year, with the market improving, we can see some returns coming from there.
All right, Neeraj, I wanted your view on escorts. We have further details out here, and the numbers actually are appearing quite disappointing because the revenues have come in higher by close to around 15%. But on the flip side, you have the EBITDA, that's the absolute EBITDA number coming in, degrowing actually by around 30%. So these numbers actually are disappointing because the margins continue at sub 8.5% order. And I'm looking through the segmental breakup, the smaller parts of their business, you have the construction equipments business, that at least has moved back into the black from, a loss in the previous quarter. And you have the railway equipments business that is contributing far more now in comparison to what it was doing earlier. Your view on the stock at around that 1,900 odd rupees?
I think as far as the margins are concerned, that has been the case for a lot of these companies. So top line has been steady, but the margins have not shown the kind of improvement which we expected should have happened this quarter. I think a lot of it also has to do with the freight cost, which has not come down for some of the companies, though material cost has come down, but the freight cost has still been heavy. So I don't really know the numbers of escorts as of now. I haven't really seen in detail, but maybe I think that may have been the case here also. And I think going ahead, I expect the margins should improve this quarter onwards, and another couple of quarters can be good for escorts. So I think one should look at the numbers very carefully and maybe use as opportunities if there's nothing else in the numbers to warrant any caution.
All right, Neeraj, stay with us. There's 7 minutes to go for close. And I want to play out for our viewers soundbite from Citi. This is Lucy Baldwin, the Global Head of Markets Research and Equity Advisory of Citi, who's pretty bullish on India. From a longer-term perspective, says that the economy can grow at between 6 and 7% a year. But valuations for now are a bit of a problem. They are elevated. Listen in.
India. We think India can grow at 6-7% a year. It's very diverse, it's very sustainable growth. But the truth is, as we know, after a good run of equity outperformance, the market valuations are quite elevated. So, for example, for us, from an equity perspective within EM, we actually like China here. And again, there's some fairly obvious reasons for that with the reopening trade. Clearly from a central bank perspective, China's at a different end of the spectrum to most of the world, where most of the developed markets, as we know, have been on a phenomenal hiking path, and indeed many EMs, including LATAM. I think for us, China and the reopening is a big opportunity for people to have a look again at that market from a performance perspective. But medium term, a market like India is going to be a core overweight for many portfolios, no doubt.
Okay, there's a minute to go for market closing, and we're going to wrap things up. The market kind of failing to build on gains, and we are going to once again close under the 20-day moving average, 17,860. It may be a matter of time before we cross it, but we did give back about 30 points, I think, in the last, from the high point, basically. Metals, IT, and pharma, the global-facing sectors did the best, but all sectoral indices were in the green. Surabhi.
Bank Nifty, Prashant, that's the one that's played spoil sport today. So as we're going home, Axis Bank, Kotak, these are some of the names on the downside. SBI, ICICI Bank, you're not seeing too much of excitement on these stocks. But on the flip side, of course, plenty of winners in the IT space today. Check out Infosys, about a 2% pop over there. TCS, HCL Tech, most of these stocks on the upside. The insurers had a good run, finally heaving a sigh of relief. HDFC Life, SBI Life, Max Financial, most of these stocks have been up and about. And relief for the Adani Group as well. Most of these stocks. Adani Ports on the Nifty about 9% higher. If I move on, Adani Enterprises has had a big recovery today, 23% up on that stock. And then, of course, it was the day of new age plays. Remember, Zomato is reporting numbers tomorrow. Let's see what it does. 9% on that stock. Paytm, thanks to the big Macquarie upgrade, 15% higher there. Nykaa and a couple of others also had a pretty good session for themselves. And then you had some positive result reactions in the form of the GNFC, Deepak Nitrite, Thermax, these were some of the other names on the upside. So largely speaking, a pretty decent day for the mid-cap market as well. The broader market, of course, the benchmarks doing quite okay, but banks under some stress as the bond market, of course, was also evaluating the hawkishness of the policy with respect to the future of course, tightening or perhaps more liquidity tightening. That was a takeaway from the MPC. Well, with that, we come to the end of this edition of Closing Bell. Thank you very much for watching. We will take a very quick break, and on the other side, Lata Venkatesh will be joined by a host of experts to discuss in detail today's RBI policy decision.